Managing your money effectively is one of the keys to building long-term financial security, but if you're unknowingly overspending on financial services, you could be sabotaging your efforts. Financial advisors, banks, brokers, and other service providers play an essential role in helping you navigate complex money matters, but their services can sometimes come at a hefty and unnecessary cost. Overpaying for financial services not only eats away at your savings but can also delay your financial goals, such as buying a home, saving for retirement, or building wealth. This video will help you recognize the top 10 signs you might be paying too much for financial services and empower you to make smarter, more cost-effective decisions. 1. You're paying high management fees without clear results. One of the most obvious signs that you're overpaying is when you are charged high management fees but see little or no improvement in your financial situation. Financial advisors typically charge fees based on assets under management, AUM, and if you're paying 1% or more annually without experiencing portfolio growth that justifies the cost, it's time to reconsider your provider. Many low-cost options exist today, such as robo-advisors or fee-only financial planners who offer transparent, flat-rate pricing. Monitoring the relationship between the fees paid and the value received is crucial to maintaining financial health. 2. You're hit with hidden or unexplained charges. Another major red flag is being surprised by hidden fees or unexplained charges on your financial statements. This could include custodial fees, transaction charges, fund expense ratios, or account maintenance fees that were not clearly communicated upfront. High levels of opacity in fee disclosures often indicate that the provider is not acting in your best interest. Transparent financial advisors will clearly explain every potential fee and will usually offer regular cost breakdowns to ensure you understand exactly what you're paying for. 3. You're sold high commission products you don't need. If your advisor frequently pushes annuities, proprietary mutual funds, or insurance products with high commissions, you might be paying more than necessary. High commission products often generate better earnings for the advisor than for you. Instead, a trustworthy advisor should recommend products based on your needs rather than their potential earnings. Fiduciary advisors, who are legally obligated to act in your best interest, usually steer clients away from commission-driven products and focus on low-cost, effective solutions. 4. Your investment returns lag behind the market. Over the long term, your investment returns should at least come close to matching broader market benchmarks like the S&P 500, adjusted for your risk profile. If your portfolio significantly underperforms benchmarks year after year, especially after fees, it could signal that you are not only paying too much but also receiving subpar advice. High fees, frequent trading, and unsuitable asset allocation can all erode your returns. Comparing your investment performance to low-cost index funds can help you assess whether the fees you're paying are justified. 5. You feel pressured to buy new services constantly. If you find that your financial service provider is constantly upselling you additional services, insurance policies, or investment products, you might be overpaying. Aggressive upselling can indicate that the company prioritizes its profits over your financial well-being. Financial services should feel supportive and educational, not like a relentless sales pitch. A genuine advisor will focus on meeting your goals rather than continually trying to extract more money from you. 6. You don't understand what you're paying for. A significant sign you're paying too much is when you don't fully understand the financial services you're receiving or the associated costs. Complex fee structures can hide exorbitant charges, and some advisors may intentionally obscure costs to make them seem smaller. If you cannot get a simple, clear explanation of how your advisor is compensated or what services they provide, it's time to consider switching to someone who practices full transparency. 7. You're charged for services you rarely use. Some financial firms charge a flat fee that includes a range of services you may never use, like estate planning, tax advice, or business consulting. If you're being charged for a comprehensive financial package but only utilize basic investment management or budgeting advice, you're likely overpaying. A better approach would be to work with a provider who offers à la carte services or allows you to customize your plan based on what you actually need. 8. You notice frequent and unnecessary transactions. High levels of trading activity in your investment account could mean your advisor is churning your account, executing excessive trades to generate commissions. Every trade can come with its own cost, which can quickly add up and eat into your returns. Unless you have a specific, active trading strategy, a good portfolio management plan should emphasize long-term holdings and minimal, strategic trades. Monitoring your transaction history can help you spot unnecessary trading. 9. You're paying high fees for basic services. Paying a premium for simple services like basic budgeting advice, a standard retirement plan, or straightforward investment management is a sure sign you are overpaying. With the rise of technology, many low-cost alternatives like robo-advisors, budgeting apps, and online brokerages offer these services at a fraction of the traditional cost. Unless you have highly complex financial needs, there's no reason to pay thousands of dollars annually for basic financial services. 10. Better, cheaper alternatives are easily available. If after a little research you find that there are many lower-cost financial service providers offering the same or better services, you're likely overpaying. Online platforms, credit unions, and independent advisors often provide superior customer service at a fraction of the cost charged by traditional banks and brokerages. Comparing fees, services, and customer reviews across providers will give you a clear picture of whether you're currently getting good value for your money. Financial services are essential for managing your money wisely, but overpaying for them can significantly hinder your financial progress. By being aware of the common signs, like high hidden fees, being pushed into expensive products, poor performance, and confusing cost structures, you can better assess whether you are truly getting value for your money. Always demand transparency, prioritize working with fiduciary advisors, and consider lower-cost alternatives when necessary. Regularly reviewing your financial services and staying educated about costs and options can help you ensure that every dollar you spend is advancing your financial goals, not dragging them down. By making smarter, cost-conscious decisions, you'll keep more money working for you and move closer to achieving the financial security you deserve.